Hello, everybody. Sina here with another Bitcoin Intelligence Report video. Today, we're going to review our 24th report, which is about to be published for our subscribers. And in this report, we're going to look at a few interesting trends and a projection of the CAGR, on-chain momentum, and what's happening at the Fed and Treasury. So let's look at it. Our first part, basically, our first section will look at Bitcoin's long-term CAGR. Then the second piece, we will look at deeply into on-chain dynamics. Bitcoin has broken above 117, which was an on-chain based resistance value that we had highlighted last week. Bitcoin bounced from that level lower a few times and just recently broke above it. And momentum is coming back, the speculation is coming back, and monetary mechanics section also talks about very interesting changes and dynamics that are happening at the Fed, the replacement for the governor, the Fed governor seat, as well as a potential Fed chair seat, and what's happening with the Treasury and liquidity. All right, so let's get into it. This week's report is titled Bitcoin's Next Chapter, CAGR, Momentum, and Liquidity Trends. Basically, we will look at long-term growth trajectory. We will look at some of our models that predict Bitcoin's future trajectory and what CAGR values we can expect moving forward. Then the on-chain section looks at accumulation zones and the distribution of supply and a few valuation models and a few levels to watch for, as well as the derivatives markets dynamics. And our monetary mechanics section again looks at the developments at the Fed and Treasury, TGA account, and so on. Okay, so in the CAGR section, first section, we're answering a question of what to expect. This is in response to Andy Constant question from me about what to expect for Bitcoin's CAGR over the next several years. He asked 10 years, but for now I'm doing 5 years. At the time I didn't have time, but I thought I'm writing this report, so why not include that as write a detailed piece and include it in the report. So let's get into it. First of all, the way I try to answer this question is we do have our models and we do have analytics, but just a chart cannot be a basis for analyzing an asset several years into the future. So we first started from looking at comparable assets. One asset you can compare to Bitcoin is gold. The other one is NASDAQ for different reasons, right? Gold is itself a barometer of liquidity and a store of value. And NASDAQ is representative of the tech sector of the asset market. And Bitcoin is kind of sits in between. It's both the hard money store of value and also is a technology, behaves like a technology asset. So we are comparing the CAGRs of these two assets with Bitcoin. When you look at NASDAQ, it has returned, its 10-year rolling CAGR has changed, moved in a range from high of 25% at the top of dot-com bubble down to negative values after 08. But this region, it has kind of hovered around this value for quite some time. Pretty much in the last 4 decades, you can say it's been returning around 17%. The latest value is 16% annually. When you look at gold, it has been a bad investment before 2000, but it began growing really fast. And as the market went into a bubble in 08, gold also appreciated, and that caused the 10-year rolling CAGR to increase all the way up to 2011. Then from that point on, correction begins, and gold comes back from 20% CAGR to about 0% last year. So last year, if you had gold, your price would have been similar to what it was 10 years before that. But recently, it has done really well. and the 10-year rolling CAGR has moved up to 10%. So the last 10 years, if you held gold, you are up 10% a year. However, notice this gold value is not adjusted for the supply increase. There's about 1 to 3%, maybe on average 2% increase in gold supply. So you can adjust it for that as well. When we look at Bitcoin, it has its CAGR drops as it enters the bear market. So it goes from 200% in 2021 all the way down to 50% in 2024. And again, this is 10 years, so 10-year rolling window. So from 2014 to 2024, we've had a 15% consistent growth year after year. I mean, on average, to be accurate. But again, because we entered the bull market, this figure has now grown to 87%. So this is fantastic. Like in the last 10 years, Bitcoin has returned 87% on average. A lot of these dynamics are also driven by expansion of money supply. And one way you could look at it is by measuring some metrics of money supply. We have M2 for now just for ease, but money supply, actual money supply grows way faster than this. This is only a sliver of liquidity that we can see, but just M2 itself has grown by 6% over the last 10 years. So essentially any asset that grows less than this is losing money. So this is kind of the minimum you should expect. Now, what can we expect from Bitcoin, right? So historical CAGR of 86% doesn't apply to future because, Bitcoin's growth slows down. And you can very well see that in this power curve model that captures Bitcoin's long-term 16-year trend in a simple and single curve, which shows us very consistent and methodical growth. And at any point on that curve, you can measure rate of growth. So initially, you can see it was at about 200, 300, and it slowed down to below 100% after 2018, and then below 50% after 2024, and right now again at 42.5%. So this is kind of like the slope of that power curve at today's value. Now, can you extrapolate that into the future? Yes, if you can just extend this curve into the future, you can predict the future CAGR values. But before that, just a quick reminder that CAGR is dropping, right? Just because the asset class is growing and it becomes slower to move, harder to move, but also harder to crash. Now, moving forward from 2025, which is here, 5 years forward, you can expand that curve and measure the CAGR in those future years, and that's what you get. So again, from 2020, you start from a CAGR of 65%, go down to 42 for today, and then from there go down to 30% by the end of 2030. So even though it drops, it will only drop from 40% to 30% CAGR by the end of 2030, right? So it's still more than 30%, massively bigger than what you can expect from NASDAQ and gold. And last part of the report, I'm addressing a question. This is all based on statistics and charts, right? So somebody, and actually Andy was implying that this is not valid because it's just group historical analysis extended into the future. He has a point to some extent, but a few caveats are necessary here. One of them is this is not a regular regression. This is an unprecedented fit. There is simply no asset that can demonstrate this clean growth. So for whatever reason, Bitcoin's network adoption causing it to show a very specific pattern. And if you look at the actual relationship that comes from the math behind this, it will tell you that every 1% increase in the age of Bitcoin gives you 5.7% increase in price. So it's a constant relationship between age and price. And that has been there for 16 years. And when you see this, you can't say that, this is going to go away tomorrow, right? It may eventually deviate from this model, but it's going to be a slow and gradual deviation, not a sudden change, right? So this is one reason you can extrapolate this line to some extent in the future. Second point, another thing that makes us believe or think that this massive rate of growth can continue is that Bitcoin is still a very small asset. It's 1/10 the size of gold, and gold itself is growing pretty well at a CAGR of 10%. It's outperforming M2 money supply, and Bitcoin will at least grow for all the reasons that are growing gold, plus a very important reason that it is a small asset being monetized and trying to catch up to gold and close the gap. So it is, in fact, fundamentally several times more valuable and more useful than gold. It's programmable digital gold with a lot less costs and a lot more usability and application. And it at least deserves equal market cap with gold, and we think actually a lot more than that, right? But if you at least consider gold market cap and you assume Bitcoin is closing the gap over time, you can easily understand that it will grow several times more than gold. And the third point is that there is liquidity in the system, and Bitcoin is the best liquidity sponge, right? Whenever they expand money supply, it immediately pumps Bitcoin, because every ounce of animal spirit finds its way to Bitcoin. And we live in a debt-based system. In a debt-based system, there is no way you can stop expanding the money supply, right? Your system literally crashes if you don't expand money supply. You have to return debt with interest. That interest itself expands money supply. Plus, because access to liquidity is not uniform across the system, you get these periodic crashes and a breakage into the flow of funds around the world, which also pushes central banks to throw liquidity at anything and everything. For all these reasons, liquidity will keep expanding. And you've seen at least M2 has grown by 6% annually on average. And this will only accelerate and keep going. So this provides a basis for a constant value growth in Bitcoin. But because Bitcoin is, for the reasons I said, it's a small network, rapidly growing and capturing the monetary value of other assets, including gold, real estate, and stock market, and so on. For that reason, Bitcoin will be the best, the most important, or the biggest beneficiary of extra liquidity. So it's going to absorb multiple levels more than gold and other things. Liquidity is what drives gold, but it drives Bitcoin several times more. Now, is a 30% CAGR for Bitcoin really high? Not really, because if money supply grows by 6% and gold grows, supply adjusted gold grows by 12%, double the money supply, Bitcoin can be at least triple gold at 36%. Because again, it's an asset that's 1/10 the size of gold. So it's very conceivable that it grows by at least 3 times more than gold. So for all these reasons, I think a 36% CAGR for the next 5 years is pretty reasonable, and it's in line with what theoretical thinking would suggest about the economics of Bitcoin. And this is confirmed by the power curve analysis as well. So that's one piece that we discuss. Next piece is about on-chain analysis. Wizard does a fantastic job going through all the important signals. He looks at the MVRV and SOPR indicators and the standard deviation bands around the short-term holder MVRV, which has been very helpful in guiding us throughout the volatility of Bitcoin. He also looks at the realized profit and loss, who's selling and who's buying. He also looks at accumulation zones to figure out what price levels have stronger support or resistance around them. and he then looks at derivatives market and liquidation zones. These are all important for understanding at what points we might see bounces. Especially derivatives markets can also give us some information about prices that we have never seen actually. So we do see some liquidation points at 140,000 here, and a lot at around 130. So if we actually go above or enter this 130,000 region, a lot of shorts will be liquidated, and that will give us fuel to go to the next level. We also see that funding rate is increasing across the board, so the market is heating, and initially that's a good tailwind for Bitcoin's growth. And then it looks at other things in our monetary mechanics section. It looks at very important events that are happening right now. The Fed is completely being revamped. We are getting a Fed 2.0 with Trump appointing a new governor, and then potentially a replacement for the Fed chair. And that can completely change the trajectory of the Fed and monetary policy. We also look at TGA refill. If this TGA account is refilled fast, that's going to suck liquidity out of the market, and for a period of time, we're going to have some trouble and some road bumps. And Renault does a fantastic job following what happens. What are the details of the dynamics at the Fed and Treasury? Definitely read this in detail. And if you're interested in our reports, you can subscribe and access our reports that are published every week on Monday. All right, with that, I will let you go, and I'll see you in the next week.